Good morning, everyone, and happy Wednesday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. Alright guys, welcome back. Thank you all so much for being here and happy hump day. It is my first day of physical therapy later today, so wish me luck. I know it'll be good, but I heard it will not be enjoyable. Now this morning we have a ton of exciting stock market news and notable earnings to get through, plus we'll see which stocks are the morning's biggest gainers and losers. Make sure you've downloaded that TipRanks mobile app so you can access all of your favorite investment research tools on the go. Links will be in the description down below. Now let's jump right into this exciting stock market news. U.S. stock futures are in the red this morning following Jerome Powell's speech yesterday. While he did say inflation was cooling, he also noted that they wouldn't be changing their interest rate policy anytime soon. Right now, Dow futures are down 0.31%, S&P 500 futures down 0.34%, and NASDAQ futures down 0.14%. Delta Airlines has announced a 5% pay increase for their employees, marking their second salary raise within a year. The company is also paying $563 million to its employees in profit sharing later this month. Last month, they had proposed a 34% cumulative pay increase to their pilots over 3 years under a new contract after pilots had voted back in October to authorize a strike. Analysts currently rate the Delta stock a strong buy with an average upside of 27%. Manchester United has jumped up nearly 17% this morning on news that they could receive a takeover bid from a Qatari investment firm within days. UK tabloids speculate that the price tag could be more than $6 billion for one of the world's most famous soccer teams. It is said that the Qatari group would also be willing to back current manager Erik ten Hag with a large pool of cash to buy new players. Manchester United just has 2 analyst ratings from a couple months ago, coming in as a moderate buy with an upside of 16%. Not terribly surprising news that a UK regulator has found that the Microsoft and Activision Blizzard merger could substantially lessen competition. Microsoft is up slightly following the news from the Competition and Markets Authority, while Activision has fallen about 5%. They said that the evidence suggests that after the merger, Microsoft would find it commercially beneficial to make Call of Duty exclusive to Xbox or available on Xbox on material better terms than on PlayStation. The CMA added that parties have until March 1st to comment on the provisional findings. Analysts currently rate the Microsoft stock a strong buy with an average upside of 5%, while the Activision Blizzard stock comes in as a strong buy with an average upside of nearly 22%. Apple is finally moving forward with their Buy Now, Pay Later service as they test the service with their retail employees. Under their new Buy Now, Pay Later program called Apple Pay Later, users will be able to split the cost of an Apple Pay purchase into 4 equal payments spread out over 6 weeks with 0 interest and no fees. This had been originally announced back in June, but technical difficulties pushed the launch to 2023. Their stock is currently rated a strong buy amongst analysts with an average upside of nearly 12%. And after speculation buzzed yesterday, it has been confirmed that CVS will be trying to purchase Oak Street Health. An antitrust group is already urging the FTC to block the deal. CVS is looking to buy Oak Street Health in a deal worth about $10.6 billion, valuing Oak Street Health at $39 per share. But the American Economic Liberties Project said that the FTC should immediately seek to block this transaction. They stated that this deal will be especially disastrous for seniors who have little choice but to rely on CVS's notoriously poor customer service model combined with Oak Street's physician practices, which have reportedly been staffed without any doctor on site. Oak Street is currently rated a moderate buy with an average downside after big growth yesterday. CVS Health also just reported earnings, so let's move right along to notable earnings reports. We have another big day of earnings reports. In the after hours today, we have big names reporting like Walt Disney, Affirm Holdings, Digital Turbine, Robinhood, and Goodyear Tire. And as I said this morning, we had CVS Health reporting. They came out with a beat on both earnings and revenue. Their Q4 earnings per share came in at $1.99, beating expectations by 6 cents per share, and revenue of $83.8 billion grew over 9% year over year, beating expectations by $7.43 billion, so a big beat there. Analysts currently rate their stock a strong buy with an average upside of 35%. Also beating expectations and rising in the pre-market was Uber Technologies. They posted a surprise profit with their Q4 earnings per share coming in at 29 cents, beating expectations by 45 cents per share. Their revenue of $8.6 billion grew nearly 50% year over year, coming in $90 million ahead of expectations. Their stock is currently rated a unanimous strong buy with an average upside of about 24%. And also coming in with a beat was Yum Brands. Their Q4 earnings per share came in at $1.31, beating expectations by 5 cents per share, and their worldwide system sales grew by 8%. They said that 2022 was a landmark year for Yum as we beat our own industry record for unit deployment, opening an incredible 4,560 gross new units. Their stock is currently rated a moderate buy with an average upside of 10%. Other companies reporting this morning include Dominion Energy, Wendy's, and Coty Incorporated, to name a few. But we're going to jump over to some of the big names from last night, including Enphase Energy. Their stock is up after they beat on both earnings and revenue. Their earnings of $1.51 beat by 25 cents per share, and revenue of $724 million grew 75% year over year, beating by nearly $21.5 million. Then we also heard from Chipotle Mexican Grill. Their stock is falling this morning because they missed on both earnings and revenue. They posted revenue of $2.2 billion, which did grow by 11% year over year, but fell $30 million short of expectations, while their Q4 earnings per share of $8.29 missed expectations by 60 cents per share. And we heard from Fortinet. Their stock is growing in the pre-market. Despite posting mixed results, the company also had strong future guidance. Their Q4 earnings per share of 44 cents beat expectations by 5 cents per share, while their revenue of $1.28 billion grew 32% year over year, but missed expectations by $20 million. Now let's take a look at which stocks are the morning's biggest gainers and losers. Our biggest gainers this morning are led by New Relic after they beat on both earnings and revenue in their quarterly report this morning. Trading under the ticker NEWR, they're currently up over 18%. They're followed by Manchester United under MANU, up 13.2%, and Millicom International under TIGO, up 12%. And our biggest losers this morning look to be Picard, but that is because the stock just underwent a 3-for-2 stock split this morning. Trading under the ticker PCAR, they look to be down 33% with their new adjusted price, followed by Capri Holdings under CPRI, down 20% following their earnings, and Lumen Technologies under LUMN, down nearly 17%. So that is going to be everything for Wednesday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. If you made it to the end of today's video, don't forget to hit that thumbs up button, share this video with your other market-minded friends, and say good morning in the comments down below. I always appreciate hearing from you guys. Thank you so much for watching. Have a great day, and I'll see you back here next time.